Welcome to the Investment Talk, everybody, the first investment podcast with a script written by ChatGPT. Today we have a very special guest, Agostino Pintus. He's the host of the podcast Bulletproof Cashflow and a successful real estate investor and developer. Agostino teaches how to invest in real estate deals over $350 million and is the owner of Realty Dynamic Equity Partners. He's also the owner of Wolf Pintus, a partnership with another major investor and developer, Kenny Wolf. Agostino's been involved in many large-scale real estate projects, including the Rockefeller building in Cleveland, Ohio, which was once owned by John D. Rockefeller. I actually had the pleasure of hanging out with Agostino at the Rockefeller building when he first bought it. Agostino, welcome to the show. And can you
Hey
tell us
man,
a little bit about Realty Dynamic Equity Partners and Wolf Pintus and what kind of projects you typically work on right after the intro?
Hey, what you got going on, man?
Yo, Nick, pass, make it slap.
yeah, absolutely. Hey, thanks for having me on, man. Greatly appreciate it. Good seeing you again. So,
Good seeing you.
yeah. But like you said, yes, we have several parts of the business that we do. Realty Dynamics is our business that acquires these multifamily net lease and development assets. So basically, it's an acquisition company, and all that company does is buy these three major types of assets. So we have multifamily. That's your standard B and C type of stuff where we go out, we underwrite, we make sure that the asset makes sense, and then we round up the cash using syndication, and we take down the deal. Basically, right? Make the unit better, increase the rents, make the place a great spot for people to live in, and we usually plan for an exit in 5 to 7 years, give the investors a bunch of money back, and everybody makes money, everybody's happy. The second line of business is our development business. So like you mentioned, the Rockefeller building is one of those deals. That deal by itself is going to be a $135 million deal when it's done. And so we do stuff like that, like redevelopment type of plays. We also do ground up development too. The bulk of the business today is centered around doing these types of deals, really to meet the demand of housing that is plaguing the nation. People need places to live, as you know, right? People are looking for places to live, and these types of assets, these ground up type of developments are really the forefront of housing for many of the folks that are out there. And the third line of business is the net lease asset business. So these are single tenant net lease type of properties. So what does that mean? That means my group and I, what we do is we buy Dollar General, Dollar Tree, Walgreens, CVS, Starbucks, different things like that, single tenant stores. And we have a fund that goes and buys these stores. And what they do is, the cool thing about it is that all these leases are secured with a corporate backed guarantee, meaning that if that owner commits to being there for a long period of time or a short period of time, whatever it is, that period of time, that money always shows up every single month. It's phenomenal deal, right? So if you have a fund and you go and buy 15 of these different stores in your fund, you can count on every single month that money showing up. It makes for a very, very strong risk-adjusted return, right? So these are the three lines of business that we do. Then we have the Bulletproof Cashflow business, which is primarily centered around education and media. So that business really helps people get into the real estate game. I realized a long time ago that real estate was really where I needed to be. I was a former corporate guy, used to run like large enterprise IT for public and private companies. After getting canned a bunch of times, they hand the box over to you and you fill up your stuff and you leave. I've done that many times. I realized, you know what? I'm not doing that anymore. I'm going to go ahead and take my future in my own hands and live live the future I want to live. So I turned to real estate, and I wish I would have done it sooner.
Yeah. Okay. Wow, that's impressive. Can you tell us a little bit about any current or upcoming projects that you're currently working on, such as the Rockefeller building?
Sure. So the Rockefeller building, we've had that little deal for a while now. We're doing other projects aside from that. Mostly is centered around um, places where there's opportunity zone and there's a tax abatement. So that's typically what we look for when we're doing these types of deals, right? With the exception of one deal that we're doing right now, which is an office to multifamily conversion in Rocky River. Rocky River is a very high end, very nice area, different type of area. But the other types of stuff that we're doing is all like OZ, opportunity zone, and tax abatement. So right now we have a $31 million deal. $31 million deal right near Cleveland Clinic, and that's right next to two other deals we're doing there, and soon to be a third deal we're building in that same area, like blocks from each other, right?
Wow.
And the cool thing about it is that the Cleveland Clinic is bringing on 20,000 new jobs over the next 10 years. Like, the jobs are one of the key metrics that we look for when we are considering investing in an area, right? Like the Rockefeller building you mentioned, and you've seen this deal.
Right across from the Sharon,
Right.
The new Sharon Williams.
That's
building.
right. Sherwin-Williams is building a high rise right next door. It's going to be 6,000 jobs literally right next door. Like, literally, there's a street, and like there's Rockefeller, a street, and Sherwin-Williams. That's one of the key metrics that we look for that'll keep us happy even during hard times, which is what we're in right now. We're in some very difficult economic times, and you want to make sure that the deals you're getting into have some sort of advantage to deal with the hard times, right? The only exception, of course, is the Rocky River deal. That Rocky River deal is centered around a different type of demographic. These folks, they have money. They will always have money. These are guys that are like, they're doctors, lawyers, engineers, those kinds of guys, lenders, they're bankers, that's that kind of thing. So different demographic. Those guys, no matter what happens, they're always thriving. So we're looking to do those types of deals. We never do deals in tertiary markets. We never do deals in markets that don't have any type of growth. So we're trying to go underneath under the radar, so to speak, and find the areas and pockets of growth, and we build on it.
Okay. All right. Cool. That's amazing. All right. So let's talk about your experience with real estate investing. What would you say has been your biggest success in real estate, and what have you learned from your failures?
Wow, biggest success. The biggest success overall really was when I worked in corporate. I was one of these guys that wanted to do everything by myself, right? I ran these large groups, but I took it upon myself to lead the team, which I was supposed to do, of course. But I almost looked at everything as like the lone wolf type of mentality, and in real estate you can't really do that, So when I committed to learning the real estate game, I had to really focus on it. I learned it the hard way. I did not learn it. Like, I didn't go to mentoring or anything else like that, which is what I should have done. I didn't. I didn't even know such things even existed when I started down this road. And I would say that the biggest thing that I learned that really helped me succeed was understanding that this business is built with partnerships. And in addition to just having a partner, it's giving all you got to that partnership, which is very, very different than how most people approach things. Most people approach things as, I'm taking everything all the time. Take. What's in it for me? Immediately, what's in it for me? What's in it for me? It's like, if you go in with that type of mentality, even you have to really think about what you're saying and how you're putting it together when you're talking to folks. If you're going with that mentality, you'll never get anywhere. If you go in with a mentality of, I'm a partner and I'm going to do everything possible to help my partner first before I help myself. If you put that partner first before you help yourself, you'll always win. Always. Provide
value, you give and you receive.
And the thing is though, it's like, and I guess as far as that partnership mentality really helped me build this $350 million worth of stuff. Is that I always put my friends first. My friends that are my partners, I put them always first. And the biggest mistake that I made is letting in the wrong partners. You let the wrong ones in, and it can really harm you. So you have to make sure that the people that you do partner with are true partners. Are they really good people? Because if they're not, it doesn't end well. And it just costs more time. You can always get back more money. You can never get back more time. Sure, it might cost you 50, 100 grand to deal with their nonsense, but if you'd rather not have to deal with any of that stuff and not lose time, right?
Right. Yeah, I agree. Time is of the essence, like they say. Yeah. Yep. So let's talk about the current state of the real estate market. What do you see as the biggest challenges and opportunities for real estate investors right now?
Well, right now, I think that people see these rising interest rates. I think now things have settled down a little bit and people have grown accustomed to it. They've already forgotten that interest rates were once 3%. Now they've got settled in. Oh yeah, it's 7%. It's not so bad anymore, right? It's pretty funny actually when you think about it, right? The anchoring bias, one of the 25 cognitive biases that many people have, right? It's amazing how people think that way. But I would also say that there's talk of how we're not in a recession yet. Well, in the technical, classical definition of a recession is two straight quarters of negative GDP, gross domestic product, right? We've experienced that. We are technically in a recession, but the media or other people are ignoring the fact that we are in a technical recession. Most people are saying that the recession is not going to hit until the end of this year. Well, it's a self-fulfilling prophecy. It's what the media is very good at, right? So if you think about that, if you're hearing if you see what the tea leaves are telling you, by October of this year, we're going to start seeing a real slowdown, right? We're already starting to see elements of it. So what does that mean for the real estate investor that's listening right now that doesn't really know what to do, right? What it means is that there's opportunity. And if the market were expanding, I would say the same thing. Here's why. The opportunity in any market always exists because people's economic situations always change. Yeah. It's an individual thing, right? Sometimes you could have a bang out quarter, and we're in a bull run and everything's going great, but some guy somewhere is having a hard time. Maybe he's going through a divorce. Maybe he's going through some sort of personal challenge. Maybe he's really sick and needs to unload a bunch of property so he can help pay for some expensive procedures. Who knows what, right? The key is to be available and have your eyes open for those deals. And if you do see a deal, how to underwrite and how to understand how to put a deal together. Because if you don't know how to put a deal together and your eyes aren't open to it, you're never going to see it. That's part of the problem that many folks out there have, is that I really want to do real estate, but I don't know what to do. It's like, now you've seen this before, Brandon. You've seen like the reticular activating system. It's like something that you put in your mind's eye that you
start seeing all the time.
Yeah, it's like I really want a Ferrari, and the next thing you know, you start seeing Ferraris everywhere, right? It's like they were always there, you just never noticed them, but you put it into your brain. Next thing you know, you see them everywhere, right? Same thing goes with success. If you put into your mind you want to see more real estate deals, the real estate deals will make themselves apparent. The key, though, is understanding how to underwrite those deals. How do you underwrite them? How do you take them down? Who do you talk to about the lending side of things? Where do you get the capital from to actually buy the asset? All these things matter, So it's amazing that for many people out there, it's like that's one of the first steps. Like having the desire is one thing. That's good. That's a first step. The second step is actually taking action so you can be prepared. So when the deal does appear, to know if that's a good deal or a bad one, right? Yeah, that's really what it comes down to.
And that's good, because that actually goes into my next question. How do you analyze real estate deals and determine that they're a good investment
Oh
opportunity?
wow, man. I mean, it's, it's that's
Yeah, I know. Yeah, I know. It's so many places to start.
yeah.
Just give me a
There's
quick summary.
yeah. I mean, there's a lot to it. It's funny. I just did a video yesterday, like inviting people to a future webinar. I'm going to do a webinar on this actually, on how to underwrite a deal, multifamily deal, of course. But man, the way that I see it, I use the same formula that I've been following for a long, long time, and that is there has to be something special about the deal. Like when I started doing single families 17 years ago, that's something I figured out. I actually wrote out a list of rules, like my personal rules, and I still use those same rules even today. It's funny how that works. Um,
Do you
but
share those?
Well, I mean, I wrote them down on a piece of paper somewhere. I don't even know where it is
Okay.
right now, but it's all like part of the operating system
Yeah.
now, right? The thing is, though, is that there's got to be something special about the market. There's got to be jobs. There's got to be income. Like there's got to be like I personally like primary and possibly secondary markets, depending on what's going on in that market. Depending
Yeah.
on the economic factors that are taking place in that market. I stay away from tertiary markets. A tertiary market is like a small market, like say, I don't want to throw stones at like Mansfield, Ohio. Nothing wrong at Mansfield. I'm not hitting on Mansfield as an example, but it's a small town, right? It's off the beaten path, and there's not a whole lot of growth there. Cleveland, there's still growth here, even though the data doesn't say that there is. When you're here and you see and you look around, you see the growth,
Yeah.
right? So
For
for all
sure.
the folks that say, "Oh no, Cleveland, no, I hate Cleveland," good. You all stay over there. I'll keep all the deals. I'm perfectly fine with it. I guess that's the basics of looking for it, because ultimately you have to assess the market and you have to assess the deal. The deal is second to the market. The market is always first. The market is always first, meaning understanding the market, knowing what's taking place in that market as to why it's a good deal. Then it's the deal itself, the building, the asset, all that fun stuff.
Yeah.
Right. And then you dig a little deeper into the financials of that deal and the physical condition of that deal. Right. So that's where the due diligence comes in. Right. But first and foremost, the market, you can always change the deal. You can put a deal anywhere, like the same way I said earlier about our development stuff. I could put a deal anywhere. It doesn't matter. I can build it. I can build that same deal in Streetsboro. I can build it in Mansfield, or I can build it next to 20,000 jobs. What's going to add more value? The 20,000 more jobs, right?
Yeah, definitely.
See, you can't change the market. You can't change the market.
Yeah.
So picking the right market matters more than anything else.
Yeah. Okay. All right. Cool. That was a lot of information, a lot of great information, a lot of jewels. All right. So, before we wrap up, is there anything you'd like to share with our listeners?
So one thing that I consider is absolutely key is the ability to talk to brokers, right? And because the brokers are actually the ones that have the ability to get you the deals, right? So we do have a free guide people can download, guidetobrokers.com. There's another one, guidetocapital.com as well. So if you want to learn how to raise money, that's another big part of it. Because ultimately, getting access to deals and getting access to money, those are the two big things that really stop people from doing anything. And by downloading those two items, you're able to get in front of, I guess, not be afraid, because it's really fear that stops people from seeing their success. And fear is fought with knowledge. If you can bridge the fear with knowledge, then you're able to succeed. So there's the free books. Go ahead, download them. Two URLs, grab them, and take a look at them. Let me know what you guys think.
Okay. All right. And for our listeners that want to invest in you or find out more about you, where can you be found?
Yeah, bulletproofcashflow.com. That's it. Just go there. We're all over Facebook. We're all over LinkedIn, Instagram, all over the place. So yeah, we're everywhere, man.
Okay. All right. Well, I want to give a big thank you to our guest, Agostino Pintus, for sharing his expertise and experience with us. Thank you for our listeners for tuning in to this week's episode of the Investment Talk. We hope you found it insightful and informative. And remember to subscribe to our podcast and leave a review. Your feedback helps us continue to bring you valuable content. Thanks for listening, and we'll see you soon on The Investment Talk. Make sure you like, comment, and subscribe to show support, and stay tuned for the next episode of The Investment Talk.